Good morning, pregame crew. It is Wednesday, February 1st, 2023, FOMC day. It is 6:23 a.m. Mountain Time, 8:23 a.m. Eastern Time, and the ADP jobs numbers just came out. Let's look at those real quick, and then I'm going to do an audio-visual check. Hopefully you're hearing me. Say hello to my friends and do a few chart requests, but just wanted to show you real quick what happened. Oh, sorry, No, it was ADP. Yeah, ADP just came out. 106,000 less than expected. If you hover on this in investing.com, it'll show you how to interpret the data. Higher than expected reading is positive for the dollar, bearish for the market essentially. Lower than expected reading, bearish for the dollar, and that's positive for equity. So we pulled back and looks like the market's trying to digest this data. So just remember, we have a lot of data coming out. Okay, AV's good, awesome. Hey Nugget, Andre, Ponzi Zombie, B-Hawk, Greg, Mighty Prawns. I always want to say prawns. You can tell I'm from the South and like shrimp. Hey Bob, Whitney, Ed, Keith, Wave, Will, Casey, Ed, Derek, Homebody, Paul, Tess, Basque, Sir Fernando, Sam, Ed, Mary. Good morning, ER. Ludovic, Sebro, Mal, Rob, Bobo. Thanks, Bob. Akin, SpongeBob, Jorge, my favorite troublemaker. Hey, Rob. H4M, Bear Market, Rachel, Scott, Oslo, very cool. Hey, D-Raj, Saeed, there's a lot of you already here. Thank you for being here. Thank you for being on time and actually super early. I like to jump on a little bit early to get you ready for the day and to get myself ready. It just gives me time to kind of warm up my TA muscles. That way, when I get started in 5 minutes with indices, commodities, crypto, I can just rip through 25 charts in 25 minutes and be as efficient as possible. Good morning, Sal. Hey, Jojo, Sid, Rochelle. Yeah, hit the like button. So we have got a big day ahead. I'm going to show my notes today. Typically, I reserve my notes for TCG members only, but I want to show you, we got Meta earnings after hours. So in addition to FOMC, we have Meta earnings, we have Apple, Amazon, Google earnings tomorrow, and we have econ data galore. So here we have data at 9:45 and 10 a.m. So 10 a.m. is expecting the largest amount of volatility of the data we have left besides FOMC. So again, I would set those alarms for 10 a.m. Eastern for about 10 minutes before that, 9:50, 9:55, to remind yourself and assess your open orders, your position, and ask yourself, do you want to carry these positions into a data release? So I can't remember a day that was this jam-packed ever. I can't at all. And I think I have my finger on the pulse of where we are. Obviously, I should have a pulse on where we are. And I have a thesis, and we will go over that. I think, as always, NASDAQ drives the bus. And we're stuck at the 65% golden pocket retrace from the high of last Friday to the low of Tuesday. And we have retraced 65% of that on NASDAQ, and we're stuck like Chuck. Hi, Sarana and Ed. Good morning. I'm going to go back up to the top. Let's see. SMH has an 8-hour head and shoulders looking thing going. This neckline is lower than the left line, so I can't really call it a head and shoulders. It would be more of a diamond bearish reversal pattern, but it's just something I want to keep track of because that really is ugly. Let me see one more time, 1 second. Regular trading hours, it's fine. So I'm just going to disregard that. I'm going to pretend like I didn't see that. So let me see something. So right where our resistance is, 24119, that would be approximately hourly overbought. So that could be a double top area. You could look to top fish. AMD beat, but I believe they guided down. So you're getting a mixed reaction on AMD. And let me show you so I can have complete transparency, which you will always get from me. NVIDIA, hourly 50 MA overhead, no true read on chart. I think semis are super hard to read right now. If you can read them, God bless your heart and all your greatness. I cannot get a good feel for this chart. So here to low. Hope you can see what I'm doing and what I'm trying to figure out. So we've retraced about where we are right now, the golden pocket of the high from last Friday to the low of the regular hours low of Tuesday. So we've retraced about 70% of that. I think it's looking a little frothy up here. I'd be more comfortable as a bear than a bull. But let me just tell you, I'm not comfortable as a bear or a bull and staying that way without factoring in the new data that continues to enter the market as we get more economic data, the FOMC interest rate decision, the FOMC conference, Meta earnings, Apple earnings, Amazon, Google earnings. They have loaded the boat on us, absolutely loaded the boat. Okay, WDC, and then I'm going to get started. They had earnings. You have some gaps below to be aware of. 41.52 is your next gap. 4-hour inside bars, just digesting that earnings reaction. So from the high of the reaction to the low of the reaction. You're at about a 65% retrace. So I think bears will be looking to top fish this. And who asked about this? Paul, I know you love earnings reactions. They are some of the toughest trades out there, in my opinion, are earnings reactions. Now, if you have an implied move of, let's say, 3%, and your stock goes 9%, 3 times expected move, those have the ability to gap and go, or gap down and continue, gap and go in both directions. So if it has an implied volatility on the earnings reaction, they're expecting 3%. You have 3 times the expected move, meaning people are in love with this earnings, the guidance, the conference call, and prices reflecting it. Those tend to have staying power. Otherwise, in my opinion, it's a big gamble. It's just a big gamble. What was priced in? What was not? Who saw the earnings and said they're going to trim their long-term portfolio and say, I don't think there's more growth left in this or more meat on the bone. So just please be careful with that. All right, let's get started. This is who I am. I'm Chart Gal Lori. I'm part of the Chart Guys community, and we teach technical analysis. If you want to give me a follow on Twitter, that'd be great, at Chart Gal Lori. And what I do here every morning is I typically don't show you my notes. I save those for TCG members, and then I go over my table, which is leaning more bullish than bearish this morning. And I always give you the disclaimer. The weighting is arbitrary based on my experience. There's a lot of subjectivity built into this table. If you'd fill it out, you'd most likely get a different result than me. I'm filling it out on what I see on the charts as the most prominent time frame that's speaking to me. So yesterday, I did not highlight this yellow. And in hindsight, VIX, because I have disregarded VIX for several months because it disconnected from the market. I said yesterday Dixie was disconnected, and I said VIX was looking for a 4-hour lower high. And that ended up being the move of the day. This is my drawing from yesterday. So we were here on this candle when we talked about it, and I drew this V shape. I said the closer it gets to 2090, this is my favorite type of top fish, going from a lower low, higher high, lower low. You've used up so much juice. I think bears would defend there, and that could be a good time to long the market, and that's what happened yesterday. So sometimes this table, I see things and I make note of it, but I'm not like, of course you can't know till hindsight, because this is truly, charts are historical. They do not predict the future. But human behavior is somewhat predictable, and that's why the charts have the technical analysis patterns that they have. Greed and fear we have all these brilliant minds before us that have figured out ways to chart greed and fear. And then we use the historical data to project the highest probability scenario over here in the blank space. All right, let me go back here. Let's look at 4-hour and hourly got higher highs with no trend change yet. Dixie, it currently favors market bulls. I'm going to go into the chart that spoke to me the most today, besides NASDAQ. And then I'll go over indices, commodities, crypto, movers and shakers. So I guess I'm going with my indices now, but I'm just kind of bouncing around between these dollar instruments, US 10-year and VIX. They gave us huge heads up yesterday, and I want to make sure I cover them. So I'm just going to be out of order today a little bit, and just bear with me because it's my show. And I can only explain things that as I see them that make the most sense to me. This is the gold chart. Do you see that head and shoulders in RSI? I don't always trade based on RSI patterns, divergence alone. I don't do that. However, when I look at this, I mean, you see how it's getting these lower lows without follow through, higher highs without follow through. These bulls are running out of steam up here. So hang with me. If this gold head and shoulders breaks to the downside, then that would most likely require the dollar to bounce. Dollar's RSI is at 34. If we would get an extreme reaction, which we do expect volatility with the dollar and FOMC, extreme reaction to the downside and make these different levels oversold, we could see a decent bounce in the dollar, a pullback on gold, and a pullback on equities. Yes, that's a huge jump, and I even made fun of myself. I posted this morning on Twitter. The daily chart has potential RSI head and shoulders. It could match up with a bullish reaction for the dollar, which is bearish for equities. So overall, this table may say bull, but at the end of the day, it appears as though we're in some type of topping pattern overall in equities, and I am going to keep my mind open to all possibilities because today, let's go over the order of events for today. We are expecting 25 basis point hike. This should be priced in. What we are not expecting, which I think the percentage went up to 1.3% if I saw what Joey posted correctly, which I can do that too. Let me go pull that up. CME Fed Watch tool. Okay, right now it's a 0.7%. Yeah. 0.25 is 99.3%. That's what we're expecting. So what we're not expecting is 50 basis point hike. This isn't priced in. If we could get that 25 basis points and dovish comments from Powell, and when I say dovish comments, I mean comments such as we plan on slowing our rate hikes or slowing our interventions or anything about slowing down the amount of hikes, that would be very dovish for the market and should be perceived as bullish. And that would indicate a small pivot. Everyone's watching for that pivot from the FOMC. So here are the steps for FOMC. If you've traded FOMC reactions before successfully, then great. All of these extra comments I'm giving you and pointers are for you. If you've never traded FOMC successfully, or you're a newer trader, or you have a small account, don't touch these reactions. In my opinion, it's just a great way. You might as well just drive down the interstate and just throw dollar bills out the window. That's what you're doing. So save yourself some pain today of watching your account go down and just go drive along the interstate and throw dollar bills, as many as you got, throw them out the window. Because that's what it's like trading FOMC as an inexperienced trader who isn't consistently profitable. It will body slam you like WWE. I mean, Ric Flair. Woo! I just did that. Okay, somebody stop me. I'm out of control. Okay, so mark up your charts. I would stick with indices or gold. Keep it simple. I wouldn't try to trade Amazon or Apple. And I struggled today. I'm like, I don't want to give them Queen of the Mountain trades because they really just need to stick with indices once FOMC occurs. But maybe this morning we could get a flip or two. Okay, yeah, bear with me, exactly. Okay. I've shared the template with people in TCG again. So if you're a TCG member, I will share it with you. Otherwise, I will. It's somewhat proprietary. I mean, y'all can figure it out, but I reserve it for TCG members. I have to save something for members that pay to be members of the chart, guys. All right. Stair steps are your friend. If I had to say anything, what's the most important of this list is that one, stair steps. You could get great opportunities. You will get great opportunities to trade today based on stair step. If you don't know what stair step is, look up stair step strategy, Chart Guys YouTube, and you'll find the video that Dan did on stair steps. It is a wonderful pattern. Buy or sell on the right side of the V, meaning not the left side. So what's coming in hard? So when I say buy on the right side of the V, what I mean is wait for a trend change confirmation. When you have this huge move down and you start buying here, 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 you're just stepping in front of a train. Bulls have proven nothing. You either wait for a 2-minute trend change, a 5-minute trend change, you wait for confirmation, and then you go long. So that's what I mean by buying on the right side of the V. And it would be the same thing for shorting on the right side of the V. So if you want to short a huge move up, wait for your confirmation. You want to short on this side because this side has infinite upside. You don't know where it's going to stop. So that's why stair steps help, because then you have a clearly defined risk and resistance in this case on this short. Let me go back to my notes. Expecting low volume volatility morning. However, we do have data. 3-star data at 10 a.m. and jolts. ISM manufacturing and jolts at 10 a.m. This is 30 minutes after the market opens. This could move the markets. So then our normal, which these are my notes I've copied over from prior FOMC meetings, the low volume volatility may not happen till after that jolts numbers. So just be ready for whatever the market throws at you. Initial reaction isn't always the real reaction. Second reaction can also be extreme. That's usually as Powell is talking. The third reversal is typically the real reaction after folks with brains have digested the fundamental information. When I say with brains, because typically your first and second is algo driven. And then cooler heads prevail and step in and say, whoa, 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 that's good, that's bad. And they buy or sell accordingly. And tomorrow we really digest the information. However, we have big data, we have big earnings. So I don't know that things are going to settle down till next Monday. Again, this is a risky, high caution day. So please, please be careful. All right, now let's go to the indices and act like we have some type of semblance of being linear. Okay, your resistance is 409.125 on the 4-hour, potential bull flag, then 401.0925. Support 4,750. NASDAQ is a little, did not retrace as well as ES. And when I click on this, I'm going to a lower time frame so you can really see it. From the high of Friday to the low of Tuesday, yesterday, we have retraced 65% of this move. What happened yesterday, y'all? At the end of the day, do y'all know what happened? It was end of month, and we have end of month and end of quarter window dressing that happens often where the funds like to make their book look as good as possible. And sometimes they can run that into that close. So we had that coupled with, what was the mock imbalance yesterday? It was one second. Let me show you. I posted this. I want the January 31st one. Okay. Maybe if I put billion. Anyway, I have it here. I just need to find it, but I'm not going to spend time doing that. We had approximately 7 billion plus on the mock imbalance, the market on close imbalance, meaning there was a 7.2 billion buys that had to be matched up. And if you don't have a community that tells you these things, you're going to get ran over by events like that imbalance, which was right here. You see where we rejected at the golden pocket? I love it. So right there, do y'all see that candle? We went 50 bucks, right? 37, no, 44 bucks on this one 5-minute candle. Huge. So anytime you see a B, as in billion, on the mock imbalance, the market on close, when the imbalances come out at 350, be ready for a reaction. Be ready. And then you can capitalize on it. So if it's 2 billion, 3 billion to the sell side, you're looking to the downside. If it's 2, 3, 4, 5 billion to the upside for a buy, then you're looking to the upside. So I have not seen 7 billion plus in a long time. And I think that was coupled due to the end of month. So knowing why things are happening and how they are happening can sometimes be helpful. Okay, this is the most important chart. And if I don't say it again, just remember that I'm highlighting it right here. Most important thing is the high of yesterday. Within 50 cents rejected off that golden pocket of NASDAQ. And why am I saying RTY is the most important? Because excuse me, NASDAQ's the most important. RTY's already blown the doors off. Daily uptrend, no problem. Weekly uptrend, no problem. 4-hour uptrend, nope. Actually, we don't have an uptrend. We don't have a confirmed uptrend. But 4-hour bull flag, higher highs, sure. RTY is leading the charge. That's why we have all those small cappers that were really running yesterday. It was the land of the small caps yesterday. And from what I'm seeing in pre-market, it wouldn't surprise me if it was the land of the small caps today. Okay. RTY, your key resistance, 1940.10. And over your 1940, see if we have another level. I didn't mark that up. 1973.70 is your next resistance. IWM is extremely strong and leading this charge. Dow had a nice bounce. We got a higher high. Again, not a trend change confirmation. Even though this is still a bull flag, you could tighten that up to the 6-hour. It's not pretty. They're giving back a little bit more than the other indices. So Dow is the weakest. RTY is the strongest. RTY is the strongest, then ES, then NASDAQ, then Dow. Excuse me. No, then Dow, then NASDAQ. NASDAQ is the weakest. So YM got that 4-hour higher high and NASDAQ didn't. Okay, I'll get it together. Don't you worry. Thank you. Oh, thank you, MG. 7.2 billion. That was right. Okay. 7.2 billion to the buy side. If I ever highlight something on mock imbalance and it has $1 billion in it and it's over 5 billion to the sell side or buy side, that's actionable information. Okay, so you have the indices. Did I cover everything I wanted to cover there? Yes, VIX. Okay, VIX has a potential 4-hour bear flag. Y'all see that? That's bullish. That's bullish for the market. So what bulls want to see is see this resolve to the downside. US 10-year is losing its strength. That's good for NASDAQ. Hang Seng closed up green, 1%. And DAX, since I woke up in the last few hours, has gone from red to green. So DAX is green. Bitcoin, here's a fly in the ointment. And when I say fly in the ointment, that's just a country saying that says, here's a problem. Here's something that doesn't match up. It diverges from the bull thesis that I formed with this table. Something doesn't add up. And it is Bitcoin. Look at this. This is a diamond bearish reversal pattern. So this is where you go up higher low, higher high, higher low, higher high, lower low. So when you break to a lower low, straight to a lower low from a higher high, you're either forming one of two things, a broadening formation or a diamond bearish reversal pattern. Because we're going sideways over here, it lends itself more to a diamond bearish reversal pattern. So that's something to be aware of. 4-hour EQ on Bitcoin, 8-hour potential diamond bearish reversal pattern. Paul, I get that from Thinkorswim, and you can also follow Fast Stock News. Walter Bloomberg posted every day, multiple locations. Okay. 1 second. Okay. Ethereum. Now, I drew the diamond pattern, but I don't like the location of Ethereum. And let me see if you can see the difference. Do you see we're not necessarily at the top of a pattern? We're on a sideways pattern that precedes the diamond bearish reversal pattern. You want an up pattern to precede it, and you want to be at the top of that pattern. Ethereum is not as clean. Something to be aware of. All right, so we're forming our second 12-hour inside bar, second daily inside bar, 4-hour EQ as things tighten up. Gold. I went over my gold thesis with the daily RSI bearish pattern, something to be aware of. And I want, if this had a little bit more exaggeration, just a little more extension, it would be a perfect megaphone. Okay, y'all ready? Higher high, higher low, higher high, higher low, higher high, lower low. Do y'all see how it gets that broadening formation? Higher highs and lower lows. It's not clean enough for me to draw it. It's just something I definitely want to keep in the back of my mind. 1950-10 is your resistance. And so before I get ahead of myself with this daily RSI head and shoulders pattern that I pointed out, I wanted to be sure to cover silver, because this is one of my favorite patterns on earth. And I know some of you can remember what chart I told you that was a trampoline pattern, and I loved it. I know y'all know which chart I'm talking about. Caterpillar. Do y'all remember when I drew that here? Do you see the squeeze holding 50 RSI and then pop? Compression, compression, compression. Now look at silver. Do you see it? Holding 50 RSI. We've got orange dots, meaning extreme suppression, compression, and we have been building pressure for 6 weeks. 6 weeks, folks. That is a lot of pressure. When, not if, when this pattern breaks to the upside or to the downside, it should get decent follow through, meaning you should get an explosive reaction, up or down, whichever way it breaks. If you say, Lori, tell me what you think is the most likely scenario, I would say to the upside, as long as it's holding the daily 50 RSI, then it favors the bulls as it's fighting to hold these EMAs. And sideways is a direction. So that means they took it up fast and they've been consolidating in time versus price. This is probably one of my favorite charts out there, silver to the long side. So I have to factor that in to counterbalance that RSI on the gold daily pattern, the head and shoulders pattern. What's more important? I'll tell you. Okay, silver price action is greater, way more important than GC RSI pattern. Does that make sense? In whatever situation you're comparing or measuring, price action always gets the benefit of the doubt. It's more important than anything else because price doesn't lie. Okay, so I like this silver chart to the bullish side. Now let's look at one more thing and then we'll move along. Okay, so XAU, which is gold over silver, we're getting tight on this chart as well. And weekly is looking for a lower high. 84.10, 84.64. We have a slight double top on the weekly. So for me, this favors silver as well, because this is gold compared to silver. You're in a topping area where gold has been outshining silver. It's at a pivotal point in my opinion. Okay, that's enough about silver. Oil, we have inventory today at 10:30 a.m. Eastern, something to be aware of. You have a tweezer top right here forming on the 4-hour, which means two upper wicks with a double top at 79.72, 79.73. You have one more hour and 7 minutes before this candle closed, so it's not confirmed yet. SLV calls are, yes, SLV calls or puts if it breaks to the downside. That's how I would play it if I didn't trade futures. So oil is looking a little toppy here with that tweezer pattern on the 4-hour. And y'all can also see we're getting higher highs without follow through. We're getting lower lows without follow through. So it has this megaphone pattern. We have inventory today at 10:30. This is not a place where I want to trade it. If I had to trade it, I would short that 4-hour double top. NG continues to give up all gains. Super weak. Coming in to test those recent lows of 2614, 2612. Bulls continue to get decimated. These bounces are just cooling off RSI, so bears can take it down another leg. So careful out there. 1 second. Yep, 2614 is your next support. This looks awful. I was just looking, the market's coming down just a little bit here. Dollar's coming in pretty hard. The dollar should get a bounce going soon when that happens, because we're 15-minute oversold, 30-minute oversold, hourly oversold. So the dollar's coming in to support at 101.659. If we get a bounce from there, that could be bearish temporarily for the market. All right, Apple. So I'm going to bring my notes over here so I can read them. Apple 4-hour lower high, the more likely scenario. 15-minute EMAs provided solid support all through yesterday. Do y'all see the EMAs below price? Super clear support. So where are we? So we've retraced about 50% of the move from the high of Friday to the low of yesterday. So 145 area may be a decent area to top fish Apple. Amazon looking relatively strong this morning. Okay, it gave all that up. $103.49 is the level. We got a double top with that level yesterday. So as long as that level is holding, it's an area to top fish. Nvidia, hourly 50 MA overhead. I don't like this chart. I don't like this chart at all. If you made me trade it, I would probably short against 197 as long as this hourly 50 MA is giving headache problems to the bulls. I just don't like it. And AMD looks very unsure of itself. Okay, it's starting to bounce back a little bit. It keeps giving back gains. So if AMD is strong, I would avoid an NVIDIA short. If AMD starts to pull back, I would then look to short NVIDIA and not AMD. MARA. This is a dangerous setup because I still have the 12-hour, 8-hour bearish diamond reversal pattern in my head on Bitcoin. But this is a super nice falling wedge here. Not super nice, but it's nice. So what I was seeing is, look, lower low, no follow through. A lower low below that, no follow through. Lower low below that, no follow through. So, and we're building a squeeze. Oh, we're building a squeeze here as we go sideways on the 30-minute, and we have a daily inside bar. I like a long of MARA against 710. And you got to be careful, because if Bitcoin breaks bear, then that idea is a bust. Meta. I like Meta for a top fish. Snap earnings got snapped in half. They're trying to bounce now. They're down 12%. So Meta got hit early on. If the bounce gets shorted and it starts pulling back again, I think Meta is a great top fish against 148. As a aggressive bear, more conservative bears waiting for 149.30 to short. PSNY. This chart has great volatility. It's a little motor vehicle company. I don't understand what it does actually, but don't have to. This is just a nice tight pattern. I like a bottom fish, a 557 for a potential long for PSNY. Okay. Net daily double top 53.76, 53.51. Got to get through that. Daily uptrend. It looks fine. It's green in pre-market right now. The market's pulling back and it's turned red, and this is green. This looks pretty strong, but I don't know how much after hours volume they have, so I'd wait for it to open and give it a little time, but it does look good. Netflix, sure. Netflix has that MARA look. Do you see it? Lower low, no follow through, lower low, no follow through on the 30-minute. It could be a long over 354.05. I would like it long. But the market needs to cooperate. All of these ideas are all trash. Once JOLTS come out and the ISM data comes out, it could trash every idea I have. So you have to be patient and just mark up your charts and get those levels. Okay, it's 7 a.m. I'm going to wrap it up. Thank you for being here. Hit that like button before you hit that exit. And I appreciate you being here. If you want to give me a follow on Twitter, that'd be great. At ChartGal Lori. And TCG members, I'll get these notes over to you quickly. Use stop losses.